Well, the Fed paused like expected, but said, guess what, guys? Two more before the end of the year. Our target rate is 5.6. And everyone went, oh, they flipped.
They flipped, they changed.
They flipped. No, they didn't flip. They just paused. They did a pause for this month. And you look at what other central banks did. Canada paused for a month, did quarter point increases. Australia paused for a month, quarter point increase. EU this morning, quarter point increase.
Yep.
Just shot the dollar down. Dollar's taking a beating this morning, big time.
Ooh, haven't seen that yet.
Yep.
But it's not much. It's not bad. At least it's a pause, right? Had to be good for something.
Yeah, because I mean, let's see how do you think the markets would react to that?
Logic perceiving they would do the exact opposite thing, right? No, like
wait, let's see what they did. Yeah, they kind of went berserk because here it is, 2:00 yesterday afternoon. Boom.
It's like Powell speaks and markets hate him.
Yep. But what's interesting this morning, everything, all the gains in the treasury bills are gone. Total rebound.
Oh, yeah.
And
which is great for me this morning. Like, I'm happy.
But with all the highs and lows, are you finding most of your lenders are kind of tentative and doing big price decreases, adjustments?
Yeah, no, and that's the challenge is because there's so much volatility there. They don't want to make the big adjustments. They're very kind of like tiptoe, like stick the big toe into the water and make a small adjustment. Like they're not actually moving. Like they're not moving the way that the markets should show. And they're very late a lot of times. Like, you saw yesterday, I was still getting price worsenings from different investors while the market after hours was improving. And they're like, oh, well, we don't know what's going to happen tomorrow. So we're going to hold back a little bit and we'll see what happens.
Yeah. I mean, you look overnight, they shot back up and then this morning just boom. Yep. When, you're looking at this, what could cause this morning? Well, we had a bunch of news come out. More economic news come out this morning.
Yeah. It's been an action-packed week, just like I mean they always are when all the reports come.
Yep. But, I mean, jobless claims come out, 262,000. That's 2 weeks in a row over 250. Retail sales came out, and I love these headlines. Drive me nuts. Retail sales up 0.4%. Well, inflation's at 4%. That's actually a loss.
Wait. You have to look at the entire picture?
Yeah, they don't adjust that for inflation. Why don't you adjust it for inflation? If you adjust it for inflation, you get a bad headline. Oh, Jerome doesn't want bad headlines.
Positive.
Yeah. Positive. Yes, positive. So you get that. China's in a world of hurt. Their grand reopening has not been grand at all.
I mean, it was a reopening of sorts. I mean,
we got
thrift store.
We got OPEC cutting oil production this week by 1 million barrels.
That must have skyrocketed oil.
No.
Oh wait, no.
No, flat as a board. Flat as a board.
Wait, nobody cares.
Nobody cares because the world economy is just
it's in a
crashing.
Yeah.
It's crashing. And then look at this headline. You've got another San Francisco hotel.
Oh, I don't see it.
Hold on.
What headline? It's that bad? You're going to hide it? San Francisco down. Never
mouse some days. Yeah. We got another San Francisco commercial property where the owner's walking away.
And San Francisco's taking the brunt of this in the commercial space right now. Like they're getting, just hammered on a lot of this. But that speaks to the bigger issue that a lot of people are starting to forecast, a lot of concern, right?
Yep. I mean, it's $1.2 billion worth of defaults in commercial in San Francisco in just over 2 weeks.
Wow. 1.2 billion. What's that? Like San Francisco, what's that? Like a strip mall and a regular mall?
The biggest hotel and the biggest mall.
Wow. So, but yeah, and that plays to the bigger piece, right? Like a lot of people are talking about on the commercial side, seeing there's a lot of these notes that are going to come due in, what is it, 2025?
Yeah.
Right. Yep. So what's going to happen? We see most of those commercial notes aren't, they're held by regional banks, right? They're not held by your Chase or Bank of America. Well, like they're not holding most of those notes. It's the regional banks that are. And what are the banks that we're seeing having issues in the past couple of months, right?
The regional banks.
The regional.
And why is that? It's okay. I've got a $500 million adjustable rate mortgage on a commercial piece of property.
That's nothing.
Jerome, this is what I understand. He already caused 3 banks to fail because of the huge increase. Mm-hmm. I mean, when you're going from, $1,000 a month mortgage to basically a $5,000 a month mortgage.
Yeah.
Numbers don't add up. And so you understand why these people are starting to walk away. It's like, I can't do this. It's not even close to, I'm not even close to covering what I have to pay. And a lot of these are big, stock owned REIT type of institutions where they've got to report to shareholders. Mm-hmm. And they're just like, okay, it's just a note. Who cares? We'll you want it? You can have it. I don't want it. I wouldn't want it either. Yeah. At that point. So you're looking at that and you see the commercial stuff, starting to fall. And then you've got all these problems. He's caused 3 banks to fail. They had to come up with an entirely new funding apparatus on a Sunday night so that they wouldn't, so that the rest of them wouldn't default.
Yep.
You're giving, and you're writing, you're giving me loans 100%. 100% of the value of my long-term note, which because of higher interest rates is actually only worth about 50%. Mm-hmm. There's just a lot of stuff that you're just like, guys, it's not making sense.
Yeah.
It's not making sense.
And what do we talk about, like this Fed policy, monetary policy, everything else, right? It's tracking like what we do today. We don't see the results today or tomorrow,
we never do.
Right? It takes time to see those results. And that's what it feels weird right now, is because I don't feel like we're getting those initial shock waves into the market, and we see the pause, mm-hmm. right? But what does the 30-day pause do? Oh, well, we want more time to see what's going to happen with the markets and this and that. Is that really what they're trying to do? Because it's going to take more than 30 days to see the ramifications.
Yeah. The reporter from Axios asked a fantastic question to Powell yesterday, mm-hmm. and it stumped him. Actually stumped him. She asked him, why would you wait to lower rates until you're at the 2% inflation? Wouldn't you do it beforehand? And he was just kind of like deer in the headlights. And it's like, that was a great question. Why would you? If you know it takes 12 months to 18 months for all your stuff to flush through to really see it in the economy, and you want to do a soft landing, wouldn't you actually start to do a cut at this point, not do an increase? Because I'm sure a lot of the regional bankers this morning are going, no, man, no, I can't take 2 more rate increases. We're going to go under. Mm. We're literally going to go under. So, I mean, there was something I found interesting when we go back to the inflation number for the beginning of the week.
Yeah. And
this is kind of interesting because shelter actually makes up 1/3 of what they calculate in the inflation number. Mm-hmm. Okay. They've got 12-month adjusted rate at 8%.
Okay, yeah, that's high for a shelter, and shelters,
Okay.
that's
Well,
housing, that's rent, that's
yeah, but let's go into the actual numbers of what Zillow and Redfin, which they're do a lot of study, and they produce a lot of numbers for us that we follow. Right now, Zillow's got us at 4.79%.
okay. So that's 4.79. You're talking 3.25, 3.2% lower
Yeah.
than what the Feds have, are
Yep.
estimating shelter at.
Yep. And then Redfin's got monthly rentals decreasing.
Decreasing. Okay.
Okay. So now if you take these numbers and you put them in and you adjust this, even if you adjust this down to Zillow's 4.9%,
Yeah.
that would adjust our inflation rate probably down to under 3.
Mm-hmm.
So why are they coming up with 8, and the people in the industry are saying no, it's more like probably between 3 and tops 5%.
Mm-hmm.
Why are you keeping that number up there so high?
Well, I think it's kind of that simple pieces. The Fed, they don't have the resources to get the most up-to-date information. So they're probably just using
They
2-month-old
can't
data.
Google. They can't Google.
We don't have time for that. No, but like that's a really valid question. Is like, is it really like we see all this news, we see the reports, we see all these, real estate, actual companies that are tracking and analyzing this data, and they're coming up with much different numbers. Is it a fugazi of like, hey, let's just throw these numbers up a little bit higher because it helps paint a narrative a little bit better?
Yeah.
Is it a
that what it is?
patented, we'll revise lower later
Yeah.
and we look good now, but we'll look good another time?
Yeah. Because I mean,
Or
since we've seen rates, kind of steady at that
yeah.
7%, we've seen a real softening in the market overall. I know, some of the transactions you and I are both working on, it's making those transactions work a lot harder.
Yeah.
Where even if we were down at that 6.5%,
Mm-hmm.
we can make them work.
Yeah.
So and we're going to continue to see that softening, I think, overall.
Yeah.
As if these rates continue to stay at 7%.
Well, Brendan, I'm just going to stop you. I'm going to throw it out in the universe. Like, I just want a little positivity. Let's get a 6% out there or something. No, like, but there's got to be actual data, right? Like, there's got to be something to drive it down there. Like, I can wish it, like, I can wish 6, but right now, it feels like a lot of the Fed, they want it to kind of sit there. They're looking for a little bit. I don't, I feel like I feel like Powell is saying, hey, I want a soft landing, but he's kind of like, I want a soft landing, like one of those when you land at the airport and you come in and everybody's cheering because you're still alive landing.
Yeah.
Like, yeah, it was soft. Nobody died.
Nobody died.
Like, that's where I kind of feel like he kind of wants is he's like, yeah, like I want some bumps, some bruises, like a little knee scrape type landing. Like this isn't going to be soft in the sense of, well, we're thinking soft. Like, I feel like they still want to see a little bit more.
Yep. I mean, we've got a lot of people in our industry out there. Oh, rates are going to be down 5.5 by the end of the year. Easily.
Yeah.
And show me where your projections are coming from, because I don't see it.
It's a gut feeling.
It's a gut. Yeah. I mean, you got Yellen borrowing, close to $1.5 trillion. You've got to create without creating dollars for these dollars. You've got to pull that liquidity out of somewhere. Where are you going to pull it out of? Well, you're pulling it out of the market. Well, at the same time, your M2 money supply is down, and their balance sheet is down. So less money in the system, more borrowing. That's not a recipe for lower rates. That's a recipe for higher rates. Because I need you to underwrite my debt Well, I don't want 2%. You got no place else to go. I want 8. You got the de-dollarization going on, so less people are using less dollars, less
Mhm.
people to buy our debt with. There's just a lot of things that you look at it overall. It's I don't see unless he wants we do land. We've
Yeah.
bumped our head on the ceiling and stuff like that. And all
Mhm.
of a sudden he's like, "Oh, we made it. Guess what? Pina coladas for everybody." Boom. We're dropping rates to 2%.
Yeah.
To get the economy going again.
Woo!
Woo!
Could happen. I wouldn't be shocked.
Yeah.
Then he gets to end on a high note. He'll be the hero.
Yeah, he'll be the hero. Yes, he will.
From hero to zero to hero again. Come on. Yeah.
Oh man. He is something. So, all right, well, let's look at
We'll get some local numbers. Woo!
Yeah, we'll look at this week's local
Real
numbers.
quick.
So, anyways, we decreased about 100 units in sales. And I think you look at it, that's when we spiked again. Took that little bit of a spike.
Yep.
Our prices stayed relatively the same overall.
That's a big
We did get
increase.
about 29 unit increase in single families available on the market.
I don't know why. Just every month, I'm like, we want to see these numbers go up in the local, and it's like we got 29 more.
Yep. I actually had a gentleman request a home valuation on his house, and we're just talking with him back and forth. He goes, "Oh, I'm not interested in selling. I'm at 2.5%." And I'm like, "Yeah, I got you." He goes, "It's nice to see my value go up." I said, "Yes, it is." But he goes, "I'm not giving up that 2.5. I'm like, "I got you, Joe." It's like, I understand completely.
You're gonna see that. You're gonna see a little bit of it. I think, yeah, and especially not for a 7.
Oh yeah.
Maybe a 5. People will move more. I don't know. People are moving out of necessity right now, or people that weren't able to take advantage of it initially, when the market, because not everybody was in a great spot. When 2020 happened, there's a lot of people that still weren't able to take advantage of the rates.
Yes.
Because they were one of the people that were actually impacted by all the layoffs and everything else, or they were in a service industry or an industry that was impacted by less travel, less this, less that, so there are people that they might be at a 5 and they're like, I don't care if I go to a 7, right? It's not that big of a deal.
Yep. And then we get into our numbers again on original list to final, consistently staying pretty steady. Final list is running about 98%. In the core, where most of the home sales are, that 300 to 500, still very little movement. Why? Yep. Very little inventory. Nothing's changing. And then here you see in the charts, the consistent.
Yep.
And our inventory, come on, man. Come on,
man. Helping bring the number up.
Yes. And because, we're halfway through June. School's done. So you really would expect these numbers to spike.
I would have expected to see a lot more houses on the market.
Yep. Because once we hit August, I hate to say it, but I think we're going to see this number drop further.
Yeah. I think you're right.
Once you get everybody back into school and families not wanting to move, getting to the condos are pretty much the same thing, sitting at that 98%, in the sweet spot for condos, the 250 to 300, you're at 99.
Boom. Yep.
Their inventories really, not moving either at all.
But at least we're bringing up the period, the average.
Yeah, we're just above the average.
Just above.
Just above.
Okay. Yeah. We can get that average number up a little bit more.
Yeah, they're only down 5% since January 1st, which is better than the better than the single family homes, which
Mhm.
they're down what? 20%. We're down 20% on single families since the
Yeah.
beginning of the year. Inventory.
So easy enough.
Yeah.
We got that.
Yeah. So I mean, Orlando's just slow and steady, consistent pace.
We are going the route of the turtle. Our coach is the turtle. We're not playing this rabbit race. Like, we're slow and steady, and we will win the race, right? Like,
But that's what real estate is. Real estate is a slow and steady. I mean,
yeah.
look at the couple we helped this week. You know, we spent about what, year and a half with them.
Something like that. Yeah.
Yeah, they were, you know, both self-employed, needed to tighten things up, needed to actually adjust their taxes to show their income.
Make sure that they claimed what they actually, well, maybe, simple stuff, like make sure taxes are right. Hey.
Yeah. Make sure the IRS loves you. But they did what we suggested.
Mm-hmm.
And I mean, they got a beautiful home.
Yeah.
This week. You know, those are the ones you really enjoy when you can work together as a team and get them to their goal. You know?
Absolutely.
So, well, that's our show for the week. Please like and follow. Join us again next week. As always, this is the Orlando Real Estate Buzz. Take care. Have a wonderful day.
Peace. Have a great one, guys.